What's going on, you guys? Jay here, and welcome back to the channel. So we're diving straight into this one today because we've got a lot to go through here on the channel. What I'm trying to do is best position myself in this current market, and the current market isn't good. We're seeing a lot of back and forthing with tariffs, these trade wars really kicking off and having a general effect on the broader financial ecosystem. But something that isn't being affected in a negative way is going to be gold. And this is definitely an asset that more or less you do not want to see rising. And I myself holding a lot of gold bullion coins and silver bullion coins because, yeah, they're tax free. So it's not a bad day for people who are invested in gold, whether it's physical or whether it's in a digital form. But what we're actually seeing is this dollar depreciation rollout and the ongoing risk of gold rising even further. And this all is really evolving in this uncertain market. So, yes, people are going to start to move their money into something more certain like bullion. This has always been seen as a safe haven. You've got further escalating trade tensions between the US, China, and even Nvidia saying on Tuesday it would take $5.5 billion in charges after the US government has limited exports of its H20 artificial intelligence chip to China. Adding to this, China has then retaliated by ordering its airlines not to take any further deliveries of Boeing jets in response to the US slapping a 145% tariff on Chinese goods. So, all of this is having a massive effect. And until an agreement is made between the US, China, and any other country that is really in a retaliatory state, we're going to see gold continue rising. We're going to follow this uncertain market. And when I say it's rising, it's pushing hard again on the day, around $3,291 and still pushing. This in itself is very positive for a lot of people. It can be seen as very positive, but overall, the sentiment from this should be negative. The only time gold begins to rise is in global uncertainty, during times when we might be escalating on a different scale. And what this begins to tell us is the bigger fish in the pond know more than we do. The whales are definitely understanding the market and they are positioning themselves as best as they can. And what I'm trying to do, as I said at the beginning, is position myself during this market because essentially we're going to have a downtrend. There could be a continuation coming in. And what I want to do is try to find the best places to dollar cost average in. And you're simply not going to be able to dollar cost average in at that perfect opportunity. You're going to have to find many different spots. You're going to have to split out all of those purchases and really come in with a better game plan because essentially you do want to be able to profit from this next cycle. And I do believe the next cycle is going to be absolutely huge. It's just being hindered by this unexpected trade war. It's something that's having a massive effect on absolutely everybody. So when we're looking at more articles that are floating around on TradingView, we are seeing the US Treasury hitting around a 5% yield in 12 months. And this actually begins to paint a different picture to the one that's being presented on X at the moment. And what they're stating is US Treasury yields are expected to rise on a 1 year view, with rising government debt levels moving to center stage. And they're stating, in spite of the US's administrative promises, the US debt pile is likely to continue growing, and in the medium term, this might prompt a debate on whether the remaining AAA rating from the US from Moody's ratings is still justified. This really does start to present us with a pretty severe situation. We're looking at the United States, which is an unstoppable force, and China being an immovable force. So, what happens when those two meet? Well, your bag's going to go down and gold is going to go up. And that is the basis of this situation. And what we really want to see is more people looking towards cryptocurrency. More importantly, that market leading coin being Bitcoin. If we can see broader adoption of Bitcoin, well, you're going to see a trickle down effect. Everybody is going to be able to benefit from this influx of new BTC holders. And when we look at the latest, they're stating that Bitcoin whale addresses holding 1 to 10k BTC has increased from 1,944 to 2,014 since March 5th. So this is showing accumulation patterns similar to 2024 according to Glassnode. And if we actually go over, flick to the chart and we take a look at BTC and we say to ourselves, well, what happened during April? Was there accumulation? And yeah, there was. There was a very substantial bull flag that played out, but we saw a consistent amount of sideways movement. And this sideways movement is definitely an area where you're going to want to try to catch the lows and you're going to want to try to catch those highs. But ultimately, if you do what I do, you just hold all the way through and you try to dollar cost average at all of these low points that come in. And it's not easy. Sometimes you might catch the high point. Sometimes you might chase green candles. Who knows? But if you're better informed, if you can see what's going on externally, if you can see that the whale addresses are going up for BTC, if we can see that gold's rising, we can see that there's these severe trade agreements that are having a massive effect on the market. Well, it begins to tell us a story. It begins to prompt us into looking at the overall market and actually paying attention to what's happening with BTC. A lot of the times we find ourselves trapped inside our own bubble, our own external layer one ecosystem or a layer two or a meme coin or an alt, whatever you're involved in, we do not pay enough attention to Bitcoin. And that leads us to confusion. It leads us to go out there and ask what the heck is happening. So what we're actually seeing at the moment is a bit of an inverse cup and handle playing out, which is what we do not want to see. But this makes absolute 100% considering gold is on the rise. It's pushing new all-time highs daily at the moment. And if you had invested in gold a year ago, you'd be up almost 100% at this moment in time. Now, we have seen that sharp rise. We saw the push upwards. And this is very important. This is a crucial point, if you will, because looking back at the previous halving cycles and looking at those two peaks, we know that this is possibly the area that we are currently in. And yeah, there was an inverse cup and handle that played out previously, seeing that push up, seeing the push back down, and then eventually catching itself and invalidating that inverse cup and handle. And that's what I'm effectively hoping is going to happen here. And this is all going to be down to macroeconomic conditions. It's going to be down to agreements. It's going to be down to arguments. It's going to be down to everything that Donald Trump does moving forward, because the United States are putting themselves at center stage when it comes to crypto, and that starts with stablecoin regulations. And we put out a video going over how XRP has got a massive edge over the entire crypto ecosystem, including Bitcoin. And I really think that this is all going to have a positive effect on Bitcoin. It's going to have a major effect. We're going to see something we've possibly never seen before. And if these trade wars hadn't have rolled in, we probably at this moment in time would have seen a continuation. Now, like I said, you've got this inverse cup and handle playing out. You've got that push up. You've got that move down. And now we're currently in the phase of, is this thing going to invalidate itself? Are we going to see that big move upwards, or are we going to see what they're stating here, which is a long area of accumulation? Or will it be a short area of accumulation? What you're going to want to do in the event that this thing does start to move downwards, like I'm saying, you're going to want to try to find those low points. And as those low points come in, you're going to want to dollar cost average in on your positions. You're going to want to bolster your already existing bag. This isn't a time to get shaken out. This is a time to stay vigilant. It's a time to be aware of your surroundings. And like I said, understanding what's going on with the overall market. And if you can start to figure that out, you can start to find the patterns. You can start to understand how this market is going to evolve. And eventually, we could see that big move upwards. And if you manage to catch each one of these at the bottom, well, then you're going to benefit greatly as this thing starts to rocket upwards. And I myself, having a meme coin bag on MEXC, having that blue chip bag on Binance, I'm all about my blue chips, but I'm also about those crazy 1000x plays. BTC is definitely not something you're going to be able to grab a 1000x from in a couple of weeks. It's simply not possible. But BTC being that market leader, It's something that is a driving force, and regardless of you being invested in it or not, pay attention to it, because it's going to enable you to find that next 1000x. It's going to allow you to plan to get in on this possible downtrend. So effectively, there could be a short term rally upwards. This in itself, we would need a very big push upwards. And when I say a big push, it needs to be a big push, because the risk here really is a breakdown back to before we moved upwards. And if you go, you look at any trade in 101, you look at the inverse cup and handle, how it can be invalidated, but also the worst case scenario. Again, you can start to better position yourself in this market. And if you're someone that longs or shorts, I myself not being one of those traders, but if you are, this is a prime position for you to get a short in. Now, what I'm doing is actually preparing for both eventualities. I've got some dry powder on the sideline, and I'm just putting a very small amount into it each day that goes by. Very, very small amounts, as I've been saying. This isn't a time to go balls deep. This isn't a time to spin all of your money on red. This is a time to be cool. It's a time to be calm, and it's a time to be collect. Make sure you go out and touch grass. That's such an important aspect of trading. But yeah, let me know what you guys think. Are we going up? Are we going down? Are we going to be going sideways? Like I said, I'm planning for absolutely everything. And yeah, on the way out, guys, if you like this content, subscribe, like, drop a comment. And aside that, I'll catch you in the next one.